All right, you're watching The Money Show, and let's begin the show today with our viewer queries. And to answer all your queries today, I have with me Nisreen Mamaji, CFP, MoneyWorks Financial Services. Nisreen, good evening and welcome to the show. And let's take Dev Dhingra's question. This question is via email, and he says that he's 40 years old and his goal is to accumulate 1 CR in next 10 years. He's got ICICI Pru Nifty Next 50 Index. He's got ICICI Pru Nifty 50 Index. He's also invested in Mirasset Large and Mid Cap, SBI Large and Mid Cap, Motilal Oswal Nifty Mid Cap, and Parag Parikh Flexi Cap, HDFC Flexi Cap, Nippon India Multi Cap, ICICI Pru Multi Asset, Nippon India Small Cap, ICICI Pru Balance Advantage, HDFC Balance Advantage, ICICI Pru Discovery, SBI Contra, a lot of funds actually. And he also knows that he has a large number of funds in the portfolio. He tried doing this or adopted this strategy to mitigate the risk that's involved in the investment, but he definitely needs your feedback and your recommendation on the fund choice and the amount of funds especially that he has in the portfolio. Yeah, Nisreen.
So, you have a huge amount of overlap actually. And I understand your concern that, you are trying to reduce the risk by having different styles of fund managers and AMCs, but you will not achieve your final, goal by having this kind of, diversification. So overlapping holdings can actually reduce your diversification benefits because you end up with, very similar exposures to certain stocks or sectors. So there's no point in feeling that you are diversified when the stock portfolio will be more or less very similar. Monitoring and rebalancing will also become very difficult because of the number of funds that you have in your list. So true diversification actually will mean when you include fixed income, commodities, multi-asset funds, balance advantage categories. So when you increase the number of categories, you will achieve your goal of diversification, not by increasing the number of funds. So also you have IDCW funds, dividend declaration funds, that also you can omit, while creating a wealth strategy. So have only growth funds because you're looking at a certain kind of a goal in a certain number of period. So what you need is, you want about a 1 crore portfolio. And for this, your SIP needed would be 36,000 rupees. If we calculate at the rate of about, your compounded annualized growth rate at about 15% CAGR. So instead of 30,000 rupees, you will have to increase it to 36,000 rupees. So here what we recommend is that you continue ICICI Pru Nifty 50 Index, SBI Large and Mid Cap, the Parag Parikh Flexi Cap, Nippon Small Cap, HDFC BAF, and SBI Contra. So these 6 funds of 6,000 rupees, आप continue कीजिए for 36,000 rupees SIP, and you will be able to achieve a 1 crore fund value that you desire. If you cannot increase the SIP by 6,000 rupees, then you can increase the tenure by 2 more years. So you also have the choice of increasing the tenure or increasing the SIP figure because you have about 10 years in order to achieve your funds. So dono choices hai aapke paas, and wish you all the best in your investment journey.
All right, Nisreen, let's quickly move on to our next viewer who's on the phone line connected with us, Mr. Bharat. Good evening. How are you doing? You're calling from?
I'm calling from Chennai.
All right, so as per the details that we have, you want to invest 1 lakh in Mirasset Nifty 100 low volatility 30 ETF, and
Yes,
for more than a year. And you want to know if are you already invested? Okay, you have already invested. You want to know if you want to continue in it. Sure. Any specific reason why you chose this ETF?
There are two queries. One is whether I should continue this. The second one is how liquid is the fund, whether I can sell it if I want it.
All right. This is a conservative investment for you, I believe.
Yeah.
Okay. Nisreen, what would you recommend? And also, could you also explain or start by explaining Mirasset Nifty 100 Low Volatility 30 ETF, what exactly it is?
So basically, yeah, it's a very good fund. It's a smart beta product, okay? So what it tends to do is it tends to replicate the performance of the Nifty 100 Low Volatility 30 Index. So the index is also the same. And the, the benchmark will be the Nifty 100. From the Nifty 100, 30 stocks will be selected in this ETF, which will have low volatility. Because this particular ETF is, a low vol ETF. So low volatility means any stocks which don't have a huge amount of, corrections, they will grow steadily. They are not momentum based. So there's the stocks which are selected in a low vol kind of a product will ensure that there is not too much of volatility and will have a steady increase or decrease depending on the market conditions and depending on the politics and the economy. So the ETF targets stocks that will obviously exhibit lower volatility and they will be more stable, okay, compared to the broader market indices. So by investing in these 30 stocks across various sectors, the ETF will offer obviously diversification benefits, which will help in the risk management process. And they also have, one very beautiful thing about a smart beta product is it is an index fund, which is passive management, but an active style is, applied onto that index fund, whereby from the index, certain stocks are selected. So it's a mix, a hybrid between active and passive management. It also will bear a low cost because of this particular reason. It is a passive fund with an active style. So the costing will be much lower. The expense ratio will be lower compared to a 100% actively managed fund, and this becomes very cost effective. When liquidity is concerned, it is not an option. I mean, not a problem, and you will get the same liquidity that you will get in any other mutual fund. So I think it's a very good choice of investment, and you need not have any kind of queries or worry about the liquidity issue. And it's a great fund. It will give you a certain kind of low volatility. You can also look at adding a momentum fund. UTI also has 150 stock, 150 Nifty, from which it selects about 30 stocks which are momentum based. So I think a strategy where you do both a momentum and a low vol strategy, if you combine it for the next 3 to 5 years, I think that you will also get a very good experience. So you can combine two smart beta factor strategies.
All right, that's the answer for you, Mr. Bharat. All the best with your investments going ahead. Let's take Abhinav Vatt's question. And Nisreen, he wants to know that he's saying that if I don't have time to monitor my investments, which is the safest and most stable mutual fund to invest in? All right, the whole purpose of investing in a mutual fund is because you give that responsibility to a fund manager, to take care of your investments. So. But within that also, he's looking for a fund that gives him stable return. So I'm guessing that he's a slightly risk-averse investor. And in that scenario, the comfort, I would like you to help our viewers understand the kind of comfort that one can get if you want to participate in equity via mutual fund. And then we can go on to, suggesting him a category where he can get the kind of stability he wants via mutual fund product in equity.
Sure. So, for such an investor, he hasn't mentioned his time frame, but as you rightly called out that, it appears to be a slightly more conservative or maybe conservative moderate investor. So I would think a multi-asset fund, would be an ideal choice for Mr. Watts. So Abhinav, I think you'll find a very good experience in a multi-asset fund, which has an equity taxation. So this would be a combination of, say, a long equity, maybe between 50 to 35%, some amount of derivatives in order to ensure that you get an equity taxation. So that entire component would be up to 60-65%. Then you will also have fixed income in this portfolio, and you will also get commodities, which is, largely gold or silver. So most fund houses today are preferring either gold or silver. Higher gold categorization will be there in the multi-asset fund. So you will have three asset classes. You'll have equity, you'll have fixed income or debt, and you'll have commodities in the form of gold or silver. So what happens is when equities don't perform well, the commodities do well. So overall, you will get your desired rate of return. These are not going to be funds which are going to chase the market, like a 100% equity fund. Because obviously with the component of fixed income also being in this fund, you will get more stable returns. What you can expect is in the range of, say, between 9 to 11%. If the equity markets are giving you between 12 to 15%, a multi-asset fund you can expect between 9 to 11%. So here you're not chasing returns, but you're expecting some kind of stability in the portfolio with various assets, including in this kind of a fund. So most importantly, what you would achieve is diversification, because in a multi-asset fund, it would mix, have various asset classes. Some of them even include real estate or international equity. But broadly speaking, we have fixed income, we have equity, and we have commodities. But there are certain funds which also include real estate and international equities. So with this kind of, multiple asset classes, the diversification across various sectors will ensure that you get a steady or a stable rate of return. It's also pretty simple because you don't have to monitor and keeping on rebalancing your portfolio. So for example, when equity markets are doing very well, the fund itself will sort of reduce your equity exposure and increase your fixed income or gold exposure. So this rebalancing and monitoring, you won't have to do. Therefore, it will become very simplistic in nature. The risk management of the fund also will be done automatically by the fund manager himself. So I think that you can manage, the risk tolerance level that you might be having, which is basically between conservative to moderate. And also you have the chance of, higher returns compared to a 100% fixed income product or say a fixed deposit because of the component of equities. So there are various choices available in the market. If you want to go least amount of risk, you can select a fund which has only got 15% of equity, which is in the long category, and the balance for 40 to 50% will be in derivatives or arbitrage, where you can reduce your equity exposure in the long category. So there are various ways of selecting your, the name of the fund or the fund house, whereby you can match your risk tolerance, at the same time have a very simple product that will possibly meet, the return expectation that you might be having, which is alpha over a fixed deposit or a fixed income product.
All right, very well explained, Nisreen. Let's move on to our next viewer's queries, Nani. And the question is that this person is 35 years old and new to mutual fund schemes and want to invest 15,000 monthly in SIPs for next 25 to 30 years. And for that, a mutual fund portfolio that can yield good returns is what the query is, Nisreen.
So basically, Nani, congratulations for starting out on your mutual fund journey. It's very important that you thought that this was a very good product for you to achieve your goals. 15,000 is a very good and a handsome figure to start with, honestly speaking. And you could go with HDFC Top 100, ICICI Pru Multi-Cap Fund, and Nippon India Small Cap. So we're trying to give you one large cap fund, one multi-cap fund, and one small cap fund, which would be a little bit of a kicker. Now you have about 25 years to invest. So, in a 100% equity fund, you won't be taking, a huge amount of risk because of the tenure being so long that, whatever volatility would be there in the portfolio over the shorter period of time would be kind of ironed out. So if we calculate at about 15% compounded annualized growth rate over the next 25 years, so you would have about nearly 5 crores in your corpus, which is closer to, say, about 4.9 to 5 crores. So that you would be able to achieve in 25 years. You said that you can continue for 30 years, so, your corpus would be even that much higher. So congratulations for starting onto this beautiful investing journey, and I wish you much luck.
Nisreen, on that note, thank you so much for being on the show and helping our viewers with all their financial portfolio queries today. And time to sign off, but I'm going to leave you with our WhatsApp number and email ID where you can send across your questions. Thank you so much for watching. Goodbye.